So in this video, I'm going to give a quick lesson. It's going to be called Never Mix Sessions if you trade 1 or 5 minute, potentially even 15-minute time frame. Why? This is the number one reason. Basically, I'm backtesting my strategy here. On the left, as you can see, there was a trade here that hit 1 to 6 or I was targeting this high. So I took it again, understanding that price does not owe you anything and it could easily drop down, retest, resweep liquidity points. So as you can see here, we entered the trade after sweeping sell liquidity. We pushed up to the last high, which was the buy liquidity, and a bit later we had a big drop that went below our stop loss before going back up. So that's why you target liquidity points, and a 1 to 6 is more than enough, or it even a 1 to 4, 1 to 3 is perfectly fine. Like these highs here, this is a perfectly fine trade because on 100k funded, you're literally eating steak, drinking wine, and you've got. I'm not sure if I can say that on YouTube, but you get like the girls that are dancing. You've got them all in your house if you're hitting 1 to 3s. So we have the price selling off, hitting the 5 minute. We had some engulfing 15-minute candles, fair value gaps here. Normal fair value gaps formed, and then we failed to break above this high on the 15. I'm just not switching time frames. I'm keeping this nice and simple. So we pushed up above this high and then started to drop, showing that we're failing to break above the high. So when we retraced into here, I had it marked out that we have a fair value gap in here. I'm not sure. I think this could be even 15 minutes. It could be a 15-minute fair value gap. We put actually fine. Let me check it out. It's 15 or 5. It's a 5 minute fair value gap. Yeah, 5 minute fair value gap, and 5 minute has turned bullish. So I was being careful. Now on the 1 minute, we've got the 5 minute fair value gap that we are inside. So delete that to make it more clean. We have a 1 minute fair value gap in here, which caused the break of structure below the last low here. We entered the 50% and reacted off of it, but that's just one confluence mixed with the 5 minute fair value gap, so it's not strong enough. So we wait. We get a push up. We tap our order block here on this candle. We enter on this sell candle. There's a reason for it, and the people in the Discord know it. So get on the Discord and get your lessons in. And then um, we also filled in the fair value gap more deeper, hit potentially, I would say, the breaker block as well in here because it's the last POY before we pushed up. So it's like a breaker block as well. You could have been playing it more safe on the trade. So you could have said, okay, we've got the reaction and you're still waiting. You've got an inverse fair value gap here showing you that bullish 1 minute structure has been inversed. So in this situation here, when we had this sell, or let's say before the sell, you've got bullish structure and you're looking at it and saying, I think we're going to sell, but 5 minutes is bullish and 1 minute is bullish. You've got no bearish structure. So you're entering basically against 1 minute and 5 minute time frame to the downside when it's all going up. So potentially you could have been more safe and waited for the inverse. So we had a 1 minute inverse. We also failed to break above this high here, showing us again lack of power. Inverse fair value gap. Then we have a new fair value gap, and then we've got a reaction here. So you could have entered even. It would have worked. You could have even entered on this candle down here. Yeah, because that small candle didn't touch, I'm pretty sure, and it wouldn't work. You could even enter on this candle here and target some liquidity down here. This is a perfect trade. Look at this. You enter on this candle. You don't go into minus at all. You quickly take out 1 to 4. You go home, eat your steak, and eat your wine. Drink your wine, smoke your cigar on the Andrew Tate arc. Now, the big lesson, the whole reason for this video. Everything is going clean, nice. Look where my TP was. So let me just draw out the line. This is take profit. So let's delete these lines. That's take profit, and this is where we reversed. So I was writing down my notes, and right on this candle here, I was writing my notes because this is a back test. I was writing my notes and I said, look at the time. So I put the times on the bottom. This is Central European time. If you're from UK or Ireland, then it's 1 hour back. So right now it's 13:55. For you it'd be 12:55. For me, New York opens at 2. For you, New York opens at 1. So I wrote New York. I was gonna target my TP lower, like up to this POI here on the left or even lower. But I said New York is going to open soon. Also, on the right side, you can see hidden here is we've got a red news at 2:15 that could push price. This is because I don't mind any kind of red news. I try to avoid. So if this is NFP, the very big news, or if this is the small one, I don't care. I'm skipping it. So I wrote down that there's news also at 2:15. So I'm gonna want to take my trade because it's a back test and I don't have the ability to close the trade. I said, okay, I'm gonna just press this. It's gonna print the next candle and it's gonna just wick my TP and take it out. So at this point, I'm up 1 to 5.5. And here's the prime example. Right on this blue line, New York session opens and it flies up hitting break even. So basically I made zero when I was up €500 on the 10k account. So this is the lesson. I'm trading on the 1 minute right here. 1 minute is small short bursts or very precise patient entries that target liquidity to liquidity to liquidity, and New York loves to take out some kind of liquidity during London to power its session. So you could have went from it being that London took out all of this liquidity and these lows, and even here preparing New York for a big push up to continue the buys, or it's gonna open and want to take out this high, for example, and say, okay, now I want to take liquidity and fly down, or the price could now end up going, okay, London has taken out the lows down here for us. New York's going to fly all the way past all these highs, come for a retest, maybe sweep a low in here, and then get a little buy up to the top. So New York is basically considered like a whole new day almost, where you have to reanalyze, rewatch, and see what New York wants because it's new bias, new traders, new banks, new institutions, new everything, new session, different time of the day, and you have all obviously power of three, so accumulation, distribution, all that stuff. You've got different times of the day. Maybe the morning is a drop, the middle of the day is liquidity sweeps. That's why you don't connect or mix sessions. Try to stick it. If you stick here, you have a nice 1 to 6. You stick here, you have a 1 to 5 or a 1 to 4, and you walk out London session 1 to 10 or minimum. You are more than happy with 10 or. That's 10,000 on a single 100k account. That's almost half of someone's yearly salary that you could have just made in London session, and you don't even need to touch New York session. So that's your big lesson. Do not mix sessions if you trade low time frames. I'll see you in the next video.